How can you benefit from a possible shift in the stock market? For months now, big AI stocks have been the force pushing markets to new all-time highs. But now, the momentum shows signs of fading. So what does this mean for you? Is this a pause or the start of a major market correction? And if this is the beginning of a crash, how do you protect your wealth? In this week's podcast, we'll get into this and so much more. Today, I'm joined again by Harry, one of Direct Bullion's senior gold specialists. He's here to break this all down. Harry, welcome back to the podcast.
Hiya, Jake. Cheers for having me. Nice to be back again.
Welcome back.
Yeah, thanks very much, mate.
Let's get straight into it then.
Perfect.
This AI bubble's been in the headlines recently. What's your take on the current state of the markets?
Yeah, it's really interesting, isn't it? Because AI is no longer this thing of the future. Companies are implementing it massively, and actually some of the valuations of the companies putting into AI is huge. So yeah, very interesting in the news actually. Michael Burry, the same financer who forecast the 2008 property crash. Some of our listeners might have seen The Big Short. It was a film made off it. And what he essentially did back then was something that no one else believed in. He forecast that the American market was going to crash, the property market. Goldman Sachs, JP Morgan, Lehman Brothers, all these huge institutions thought he was obscene. Absolutely ridiculous bet. Of course, we all know what happened. The 2008 crash came. It was horrendous, and millions of people not only lost a significant amount of money, but lost their homes. This was terrible, and we talk about it now because the past moves on quickly, doesn't it? But this same Michael Burry has actually just done the same wagers against AI. Now, I'm sure a lot of our listeners have heard of Nvidia, Palantir. These are some of the Nvidia is valued as the largest company in the world now. They overtook Apple very recently. I think it was 5 trillion, something like that, wasn't it? Massive amount. He's bet 187 million against Nvidia and 912 million against Palantir. So this is not a financer just hedging or wagering crazy figures or thoughts or process. This same Michael Burry, when everyone else doubted him, Jake, correctly forecast the 2008 crash. Now, there's obviously articles against it saying don't be ridiculous, AI is here to stay, but I don't think that should be ignored. AI is a complicated matter at the best of times, but it is a very tell sign, and I know we're going to go on to it a bit later, that actually is this bubble about to burst? Is that bubble coming?
We go straight into the next question. Do you think this is a sign of a major market correction? Yeah,
and Michael Burry is one financer. Of course, there's for one of one, there's 6 of the other. So we can't just take that. One thing that has been reliable for many years is the Buffett Indicator, the Warren Buffett Indicator. The Buffett Indicator, as of today, values the US stock market at 223.4% of GDP.
Wow.
Why is that so important? Well, a ratio above 100% indicates the market is larger than the economy. So anything over 100%, the value is more than what is actually being produced in that economy. He has actually been previously warning people anything above 200%, and I quote his words here, is playing with fire.
Warren Buffett.
Well, exactly. I think it's actually a very serious matter, Jake, because I kind of think the West are turning a blind eye to it right now. The cracks are appearing.
I agree.
Musk is trying to get one of the biggest drawdowns in dividend payouts in history of the stock market. The Buffett Indicator is double where the point of no return seems. Michael Burry is forecasting huge odds against these AI companies performing. It is a real concern. What is around the corner? We don't know.
No,
that's the worry.
We'll have to wait and see
for sure.
So historically, how has gold tended to perform when markets like this start to falter?
So gold in its nature is counter-cyclical. It goes against the trend of what's happening. There's a famous saying in Wall Street: put 20% of your wealth in gold and hope it never goes up. Now, what they mean by that is if gold tends to do well, that normally means the rest of the markets are performing poorly. We are seeing a very good run for gold. Why? Well, as we've discussed on podcasts over and over again, geopolitical tension, interest rates, inflation, all these buzzwords you hear in the paper. What does it actually mean, Jake? Well, interest rates being down, your money's worth less. Inflation going up, it doesn't buy you as much. You're getting battered at both ends. And once again, who are the people struggling? All of us. All of us are the ones that are struggling. But let's look at gold's history. Gold in the last 20 years has gone up over 1,000%. It's proved time and time again how reliable it's been, how good of wealth protection it's been, and the fact that it can just always beat inflation. We try and be transparent. We want people to know the whole story of gold. So in the last 20 years, there's been 17 positive years and 3 negative. Even when we've seen those negative years, within the next 2 years following, you've been back to where you were, or made a profit. Which I think, for anyone looking at a long-term hold, that's exactly what you want. Something that reliably performs.
Absolutely.
And even when it does stagnate, it bounces back. I don't know anything other than the property market, Jake. What can you think of that does something like that?
I think that's really, those two are the only ones. So moving on from that, what are maybe the key mistakes people make when trying to protect their wealth?
Yeah, and I think it's really important to look at what we've just said. You've got history doesn't repeat itself, we know, but it's a very good indicator of what's to come. It's a tried and tested method. A lot of the time when we speak to new clients, they're looking at the here and now. They're trying to get the top of the market or the bottom of the market. That's not what you should be looking at. What we are looking at, especially with gold, is wealth preservation for the future. Whether you're using gold as a pension, whether it's a nest egg, whether it's a legacy to pass on to loved ones. Gold should always be looked at over a 5, 10, maybe 15-year period.
For sure.
This isn't money that might make you a millionaire overnight, but for sure, if you are smart with your money, if you put into something like gold, as we said, the last 20 years, 1,000%, Jake. That is a huge return that people could have seen on their wealth. I think the other thing as well, Jake, people stick to what they know. So many people are with their bank because they've always been with their bank. And I was having a really good chat with a client yesterday, and he was a bit unsure. The bank had suggested going into ISAs, stocks and shares with them, and we actually
always the way.
Oh, exactly. No joke, right? I mean, the bank offering the bank's products. What a surprise!
Exactly.
But we then broke it down. I said, look, you called the office. How quick did someone answer? Instantly. Always. The customer service part is why we set ourselves apart from other competition and other companies. But when was the last time you called your bank and got through to someone? When was the last time you walked into a bank, if you can find a bank that is, and the bank manager went, here you go, this is what your money's doing today, this is where it's being invested? When was the last time you just got anything from your bank other than, here's a change to your account details, here's a change to the interest rates you're going to be receiving?
True.
It is,
would you
right?
like a credit card?
Exactly. And I understand why people are apprehensive moving into a market for a new time.
Yeah.
However, look at where you currently are. It's not better the devil you know. It's these same banks that are forcing you to go with their products, forcing you to stay with them, making you so scared to leave.
Making it seem like that's the only option.
Exactly, Jake. Yeah, as we said before, what are these banks doing? They're buying more gold than ever.
Yeah.
They're stockpiling more than ever.
They don't want people to know that.
Of course they don't. Of course, because if you take your money out of the system, they can't leverage it. They can't invest it a million different ways. So I think you've got to look at what gold's done. You've got to look at what the forecast for gold is from some of these big banks. Even if they don't like it, they're forecasting great returns for gold. Yeah. And you've also got to consider, oh yeah, actually, I understand why the banks probably don't want me to leave, because they need me.
Absolutely.
And there is a mass exodus of people leaving the banking sector because they are losing faith in it. And we are losing faith in it in the masses. So they're making it harder and harder and harder to get out.
And keeping the topic on wealth protection, what are people most interested in at the moment when it comes to gold?
Yeah, so typically always most popular are British gold coins.
Absolutely.
Yeah, they're VAT free, they're CGT free. So that means no 20% tax on the front end and 100% of the profits on the back end. We typically work with the latest coins just due to the demand. We're always working with, we're actually on the 2026 releases right now. Yeah. If you like a little bit of detail, we're currently working with the Tudor Beast series. It's a follow-on series from the Queen's Beast, which was one of the most successful series of Royal Mint ever produced. And the current one is the 2026 Queen's Lion.
So what makes that coin stand out?
Yeah, I mean, many things. It's 24 karat, so that's 999.9% purity. 2026 release, so you're not paying a premium for an older coin. You're getting the latest ones on the market. They're limited volume. They're not mass produced like Britannia's are. The design, as we say, the design following on from the Queen's Beast, it's a very popular series for that point of view. And the track record of how the previous coins in this series have done. All of those together make it a hugely in demand coin. Yeah,
just go into a bit more detail about that. Why are they particularly significant when it comes to protecting your wealth?
Well, I think, as we say, it's the tax efficiency of it.
Benefit.
It is definitely keeping it away. The counterparty risk. You can choose to take delivery of this. You can look to have it in storage. That's down to the individual. But I think by all means the last thing you want to do is get your money out of the system to then pay tax back to the system, right?
Exactly. Before I let you go, we've got to go into the latest Robbing Rachel report. Speculation is rife at the moment. She's going to launch a new paper mile car tax in the autumn budget as she scrambles to find this 50 billion financial black hole and plug it. What are the key implications of this paper mile tax for vehicle owners and electric vehicle owners as well?
Yeah, look, I think we've made some very serious points today. I mean, people are going to lose potentially millions in stock markets and such, and the way the AI bubble's going, who knows what's around the corner.
Yeah.
This one is just such a shambolic approach from Labour, isn't it? It really is. I mean, I'm sure they've made in manifesto pledges before about everyone go electric. This is what the way the future is. To only start taxing it, I think I saw an article. It's going to cost the average user an extra £650 a year.
Yeah.
So they pushed the green option. They said everyone must do this. This is the way to go. This is the way to help. This is the cheap alternative to now pay a tax on it. It's just another. I don't know if they think they're being smart, Jake. I don't know if they think that the British public are stupid.
I feel like it might be the latter, but
honestly,
could be anything.
It's just. Do you know what it actually shows us, Jake? I think they're in such a hole.
Yeah.
Such an enormous hole that we are all going to be paying for it. We've been talking over the last few weeks, where will the tax come from? What will she tax? Where's it going to be? Now we're seeing articles. It seems everything under the sun's getting taxed.
Yeah. And she never denies it. That's the thing.
This is the worry, isn't it? This is the massive worry. I mean, when you start seeing pay per mile tax for electric vehicles, I guess that's something not trivial. Of course, it's an extra burden for everyone to bear. But what are some of the more serious taxes coming? We've seen the ISA allowance talk. Yep. We know that. We've seen the pension thievery. I don't know what the right word to say there is, but the pensions get scrutinised maybe is the right word. What else is going to be coming? £110 billion, Jake, has been borrowed so far this year.
I know.
110 billion. That's a massive deficit that's going to need to be covered.
Yeah, absolutely. And inflation's still sitting at 4% as well, which is double what the target is.
Exactly. I mean, these are the figures that they release. I mean, we try and get away from this when we speak to people. Interest and inflation, whatever figures are actually released to you, all I know, I cannot remember the last time I got a decent sum of money paid to me by my bank. Mm-hmm. And all I do know is my shop at the end of the year is far more expensive than the shop at the beginning of the year.
Absolutely.
So regardless of what figures are put in front of us, money is buying less and goods are costing more. We are getting punished at both ends. And on top of that, we've got a budget coming out that's only going to make that detriment even worse.
Absolutely. And it's coming soon. Let's keep it on the bottom line. Last question. What does this mean for people who either own gold or are thinking about owning gold?
I think it means protection. That is the bottom line. There are products out there, there are options out there that could make you a millionaire overnight, but we always come back to gold for its reliability.
Yeah.
It is that absolute undeniable reliability of gold showing over lifetimes its performance, that why people should look to protect their wealth today.
100%. Well, Harry, again, thank you so much for being on the podcast with me. Really appreciate it. Super informative as always. And yeah, just thank you so much.
No, you're welcome, Jake. Thank you again.
Cheers.
Bye-bye.
Thanks, Harry. Well, that's a wrap for today's episode. What's clear is this: markets are shifting, tech bubbles are deflating, and government policy continues to add uncertainty to financial planning. So the real question becomes, are you prepared? Not just for stock market volatility, but for protecting your wealth over the coming years. That's exactly why so many people are turning to physical gold. It's one of the few assets that sits outside the banking system, can't be printed, diluted, frozen, or manipulated by political or market forces. And with the 2026 Queen's Lion now available, there's a rare opportunity to combine historical significance, limited availability, and capital gains tax-free gold in a single, tangible asset. Remember, you can get more information on gold by requesting your free copy of our guide to tax-free gold. It's packed with information you won't find anywhere else. Simply go to guide.directbullion.com. Don't forget, hit subscribe on YouTube or follow if you're listening on Spotify. Remember to like the episode as well. Next time, we'll be diving into the latest market shake-ups and updates on high-value collectibles like the Tudor Beast series. But for now, share this with someone who's on the fence about gold, comment below and we'll answer your questions in the next episode. This has been the Bullion Advantage. Thanks so much for listening. The purchase of gold does not constitute an investment or offer financial returns. Gold is considered a store of value and not an investment product. Past performance of gold is not indicative of future performance. Prices and values of precious metals can fluctuate and are influenced by various market factors. Direct Bullion does not provide investment or tax advice and recommends that you conduct your own independent research before making any purchasing decisions.